Good evening, everybody. Hold on for one more second. Something like a gander here. The market was kind of that lethargic trading day that you would expect, or if you read the seasonality books, there's usually a rule of thumb that if there's usually an up day before a 3-day weekend, the next day after the 3-day weekend is a down day. Not necessarily always true, but statistically enough that people at least observe that type of situation. As we can see, the Dow didn't back off all that much on a selling day. The NASDAQ did sell off, but I don't know whether you'd really consider this a signal. Not really. You don't have a hanging man because the tail's not 2 times greater than the body. So this is just kind of a down day in an uptrend. I still suspect that your uptrend is in progress as long as we're above the T-line. Just some backing and filling days. And the S&P 500, kind of the same scenario where it backed off, but it really didn't do anything with any great magnitude today. I would just suspect we're just backing and filling on a up day or an uptrend. And let's see what else we got. Oh, the transportation index were a little bit worrisome. That had a hefty down day, but once again, not a sell signal, just a big down day and an uptrend. So it closed right here just below the T line. So let's see. Are we getting sound? Okay. All right. So anyways, all right. So it was kind of a nothing day, which was good because still had the pool people here. And it's kind of surprising. Had the well people here also. And I guess it's a 20-foot by 50-foot pool, which is a little bit bigger than a normal backyard pool. And this pool was built for Mr. Murin, who was the CEO of Westinghouse for a while. He was also the chairman of Commerce, either under Reagan or Clinton. Anyways, he was a bigwig. Before we moved in, there was tons of pictures with him with big politicians. So they had the son-in-law who built the house, who's a big building contractor here in town, put everything extra in this house. But the surprising thing was, here they had this great big pool, and the well people told us today there was no way to put water in the pool, which sounded unusual. Every pool that I know of has a valve where you add water to the pool, but none here. So anyways, that made for a fun realization. But now I've got to collect rainwater off the roof and store it so that when the water in the pool gets low, I can pump it in or blow it in. So anyways, we're crude oil. Look at crude oil. And this is where you kind of observe the obvious. Let's make these curves smaller. My big rounding top. Would suspect they're coming back to the 50. See what natural gas is doing. Yep, getting clobbered. Natural gas, there's plenty of it around. As soon as the U.S. industry figures out to that's what I was going to do, is have the fire department come out, but I just called a water people, and it's very inexpensive to come fill the pool. Let's see, natural gas, if they can figure out how to convert natural gas into more energy usage, the U.S. should have a booming economy sometime down the road. Interest rates just sideways. Nothing here to indicate that we're having any major change of. Yeah, that was the problem. We did have to flush the toilets. Let's see, interest rates, the dollar. Dollar is now starting to pop back up. I'm going to take a look at this longer term chart. It's just kind of in a trading range. Hard to trade this on a longer term. There's the euro. Notice where it failed. Right here at the 50, gap back down. I would be ready to short the euro on any weakness tomorrow. Yeah. Anytime you see a sell signal, a strong sell signal, a doji, hammer, harami, followed by a gap down right at the 50-day moving average, pretty much tells us that they're probably going back down to the bottom of the trend channel. And after playing the sprinkler is right. Gold. Gold starting to back off. Not in any major trend one way or the other here. As you can see, we're pretty much locked sideways. This looked like a J-hook pattern slingshot effect. It needs, if this was still in an uptrend, it needs to open positive, get back up above the T-line, staying in this 45-degree. Silver, somewhat the same scenario. It has to open positive tomorrow to stay in this upward trend channel. He's building 38 huge houses across the road. What was a nice pastoral landscape is now turning into a housing complex. Not a housing complex, I guess. The houses are going to be relatively big. Okay, what else do we have out there? Been trading back and forth on feeder cattle. Trading off a little bit after hours, but still in this strong uptrend. And live cattle, also nothing to show there's any real weakness in this one right now. Still in this fairly strong uptrend. I haven't even taken a look at this. See what lean hogs have been doing. Lean hogs, see if there's anything. No, nothing here that tells you that it'd be hard to trade other than holding them longer term. Review the signals on the euro again. Well, you basically have the first analysis I usually make, which is just instantaneous, is which way is this chart moving? It's in a downward direction. What did it do when it hit a resistance level? Well, I did a shooting star, harami, followed by a gap down through the moving averages. This tells me more than likely they're still heading down, still in this downward trend channel toward the bottom of the trend channel. Now, that's a more obvious chart than what we're seeing in the dollar. The dollar's usually opposite of the euro, but it's really not going in any direction. Let's see. Why is today's transports not a bearish engulfing? Oh, who asked that? Jim H., I'll let you answer that. Why is this not a bearish engulfing signal? I'll answer. Because it looks like it opened below where it closed yesterday, So it's not a bearish engulfing signal. If I can do this correctly. Probably do it better over here. Well, shuts butts. Where's the darn index? There it is. Transports. All right. If we go here, today it opened at 82.92.34. On this day, trade closed at 84.74. So it's close, but it actually opened a couple points down below Friday's close. So it's splitting hairs, but remember, the Japanese rice traders told us what the most powerful signals were with the criteria, and the criteria would be that it had to open higher and then close below the previous day's open, which it didn't do. It opened lower and closed lower. So that's, I know that's splitting hairs, but that kind of changes your analysis. That this is not a reversal signal. It opened a couple points lower. Oh, let's see. Corn, still in a downtrend. Now, I would have suspected, let me get this. I would have suspected we were near a bottom because stochastics were in the oversold condition when they gapped it down. Remember our simple little criteria? If you see a gap down in an oversold condition in a signal, which this is almost a hammer signal, it might have been a hammer signal, that tells you start looking for a buy signal. Soybeans are trying to bottom, but they haven't yet. They also gapped down today. Now, we're seeing this as today's trading, and this is currently the little after hours trading. And whoops. Wheat. All you can do here right now is stay short until you see a buy signal. Coffee might have had a possible reversal with the big hammer signal, but it's not quite in the oversold area, so I would still not be trading coffee, only because there's really nothing here to tell me which way it really wants to go. Cocoa, another hard one, really not any great direction. It's pulling back, but it's still in this upward trend channel. Wouldn't trade this one. And cotton. Now, I say when I wouldn't trade this one, it's because I want to see something definite. Now, cotton, obviously, is still in a strong downtrend. I missed that one today. I looked at it too late. And what other ones? We did, okay. So, anyways, this one, if you're short, you stay short until you see a buy signal. Now, you stay short until you see where do most people sell. They panic sell at the bottom. That's where you start seeing the magnitude of the signal start getting bigger. A lot of these big down candles prove to be belt holds tomorrow. Oh, not belt holds. They might be where if they open up positive and do bullish haramis, that tells you the selling has stopped. With larger candles after a long downtrend, wouldn't it be close? Yes. Some of these are telling you, especially when you get to the oversold area, you're starting to see the panic selling and you start looking for buy signals. Okay. All right. Nothing real exciting out there. Now, I say there's nothing real exciting in today's market. This market trend is still obviously a very slow upward trend channel. And I say obvious uptrend channel because this still is a market that, even though it's an uptrend, it's hard to trade. Most of the positions by now, I say by now, at some point, if you let the market tell you what the market is doing, which is the Japanese advice, you've got to kind of figure out that this is not a steady market. This one's very choppy, trending. So that means either you're trading very short term or you're playing a little bit higher risk. In my case, I think it's higher risk. You're holding on to positions for the longer term because overall it's heading up, but you're getting all this chop in here. So it makes it kind of difficult. So there was some today that people had emailed and said, what should we do with these positions? This is where you kind of just observe the obvious. If you've got positions that have done a sell signal like a dark cloud, and they open it lower and trading down, that's not what you expected coming out of this pattern, which was a J-hook. Especially when they started coming down through the T-line, that's when you want to start closing out these positions. And the reason you want to close them out is, again, our biggest fear is, oh boy, do I want to close out now? And this takes off without, maybe you got to take a look at the chart and say, all right, this chart's not telling me there's a lot of upside force right now. It might find a support level, but it might not. So why take that risk? This chart, this is CLDX. This chart is basically telling us there is no buyers in here right now. Get out of the position. And the one thing, I'm saying this with kind of a little bit of emphasis, is because I sat through so many times where, oh, there's my pattern. It should be going up, but it's going this way. Do I wait to see whether it turns back up? I finally realized it's not doing what the pattern's telling me it's supposed to be doing. Close it out. And I say close it out with also that little emphasis, because what is our biggest, hardest trading hurdle that we have to get through? That's telling ourselves, all right, this position didn't work, close out the position. Now, I've gotten past that because I know if I close out a position and get out flat or with a small loss, that sometime down the road, there's going to be a situation, and we'll look at it in hindsight, where you get into a position like this, and it does work, and these huge profits well offset those small losses. I mean, you can have a lot of little losses erased by one big, huge up move. Now, while we're here on VJet, this one was very simple. We knew it was in a V formation. It did open higher and immediately started selling off. So this would have been a perfect case to say, all right, it should not come back down through the low of the doji, because if it did, that tells me the sellers are still there. Where's my next possible target? The T-line. Is it going to hold there? I have no idea. Close out the position. If you close out the position, again, I kind of illustrated it like having a bad girlfriend, that as long as you keep hanging on to that bad girlfriend, it keeps you from going out and finding a good girlfriend. When you close out a bad position, now at least you can look at it more rationally, saying, all right, what's it doing? I'll buy it back. If it comes back, bounces off the T-line, comes back up through this level, because now I can see it's doing a hammer signal. It bounced off the T-line. Or it trades down and comes back up. Again, if I'm buying this, I'm buying it on the basis that I'm expecting another move of this magnitude. I don't care if I lose $1 or $1.50 or 75 cents in here, as long as I'm not losing another $3 by holding on to it. So I'm kind of leading up to that if you see something that's not working, close it out. Because when you close it out, now you have your cash back in your pocket. You can either do something with this position, or if there's something better out there, you go to that and I say that you go to that. There were so many times that I would take losses and I would just stew about it, and I'd think, man, I'm doing something wrong. And there'd be another good position that looked something like this. And I say, oh, I don't know. I mean, the market's against me. I don't know whether I should jump into something like this. Well, finally, when I realized that the market didn't give a hoot what we were doing or what each one of us are doing, I'd get out of a bad position, move to the good position, and get something like this. That trade right there never even crossed my mind again. So that's Jim. Yep, that's one way to do it. Um, would you close if the move is below the body of the doji or below the tail of the doji? Unfortunately, I didn't have to make that decision today, but if it opened and started trading lower, and I saw that it was starting to trade back down below this level, if I close it out right here, knowing that it's moving in this direction, I can sleep well at night knowing that it turned around and came back up and started trading positive, and I bought back in, so I missed out on 48 cents. I don't care because I'm analyzing what the chart should be doing or what the chart shouldn't be doing. The 48 cents of getting out and then getting back in at a higher price wouldn't mean a hill of beans if this moves up another 15 points to the upside. So let's see, what was the body, or what was it? Should have closed below the doji close or at the bottom of the. Well, if I'd held on to it as it was backing off, I would say to myself, all right, see if they turn it around. Now, that would be my rationale saying, all right, maybe we're still in an uptrend. They're just backing it off. But the fact that they could move it back below the low of the previous day doji tells me, all right, the bears are in control. That doesn't look good. Close it out. Many women can think the same way about men. That's true. That's true. That's like the old couple that were sitting on the park bench, just sitting there contemplating. And then all of a sudden, she just wailed around and just smacked him on the side of the head and knocked him off the edge of the bench. And he brushed himself off, picked himself up, sat down on the bench. He goes, "What the heck did you do that for?" She goes, "That's just for all the bad years of sex I've had with you." He sat there for a little bit. And all of a sudden, he wailed up and knocked her in the side of the head, knocked her off the end of the bench. She picked herself back up and sat down and says, "What did you do that for?" He goes, "That's for knowing the difference." Anyways, it all depends on who's making the rules. Does VJet have a dark cloud cover? No. VJet had a huge up day away from the T line, away from the 3T line, and started selling off. So that was a good place to start watching. When it got that exaggerated, that's where you go to your 10-minute chart and see when the 10-minute chart sells start showing sell signals below the T line. The next day you had a bearish Harami, which told you the buying had stopped. The next day you had a doji, which told you very simply they were going to move it in the direction of how they open it. Well, in this case, they opened it just slightly positive and started trading it down. It needed to open positive and trade positive, which it didn't do. That would have told me, all right, time to close out this position. Okay, all right, so let's see, what else are we working on here? The nice thing, again, about this chat room is you got some people out there can find very good positions when your scans might not have picked up scans at or positions. David L. found this one. This was a very nice looking chart. Notice what it did in a soggy market today. Wave 1, wave 2, slow curve, breakout. That tells you there's probably more upside to the same magnitude as this. Whoops. Apple also held up pretty well today. And this is where you kind of watch to see where were we. We were right here at about the breakout level, and they gapped it up a little bit and went through it. What's that tell us? they didn't give a hoot about this resistance level anymore. That means there's probably still some more upside coming from this one. Oh, I didn't realize here. I thought it was 812, and it's 830. All right, let's take a look at some here that might be attractive, both long and short. Kendai. Kendai is setting up for the for that flutter kicker signal to the upside. So if this opens positive tomorrow, you can be buying this immediately. If it opens positive tomorrow, which way should it be going on a flutter kicker signal? They gapped this up above the previous day's open, and they open up positive. It should move in the direction of how they open it after a doji. Means it should be moving positive. So if I'm looking to buy this, if it's opening positive and trading positive, I'm buying, and then my stop's right here at the open. It should not come back down through the open of today. No, Abby, that's just trying to make sure you all don't doze off while we're looking at charts. One, there's a nice fry pan bottom at the breakout point. You got a fry pan bottom closing right at the 50-day moving average. If it opens positive, what's it telling us? It tells us the fry pan bottom is breaking out still, and there's no resistance at the 50 anymore. Where's our next target? Probably up here to the recent highs. And I think, no, here's another case of why you want to see what type of signals you have when you get to a resistance level. Now, when DDD got up here, it did a shooting star signal, which this is a case where if it's trading up here in the overbought condition, way above your T-line, get your 10-minute chart out. Let's see. I'm going to do this. I know this will take more time, but let's see if we can figure out where this occurred. Which one of these? Can't tell what date this was. I'm sure it was one of those. I'm almost thinking, no. Oh, let me try this one more time. Okay, I'm thinking, nah, I can figure this out now. It went up to 68. So that was on, well, way over here. That's the reason. I'm on a 5-minute chart. That's why it was. Okay. So there's what we're looking at. That shooting star on the 10-minute chart and starts trading back below the 10-minute T-line. That'd be a good time to take profits. Why there? Because we know already on the daily chart. Now what have I done? We know on the daily chart, we're already in danger zone or alert zone. That if we're this far away, not only from the T-line, but the 3T line, start watching for sell signals up here. Because it definitely should not close back below the 200. If it did, what's our typical reaction? They're going to take it back down and see if they're going to test the T-line. So anyways, that's whenever I see this type of thing, remember, if you just remember the basic principles of candlestick analysis, which is where do most people buy? They buy exuberantly at the top. That's when you want to start looking for a sell signal. We've got the mechanism to start looking for sell signals. All right. Another one that David L. came up with. There's another nice fry pan bottom, an ENZY. This one you can be buying on the anticipation that at least the first target is going to be the 50. And then if it gets up through there, you got a lot of running room to fill this gap up here at the $20 area. PetSmart. PetSmart, I'm just showing this one because when they gap it up, and you see it selling like this, What's this tell us? This tells us the selling or the profit taking that first gap up day is over. Whatever action caused this is now back in effect. There's usually going to be more upside. So this is, again, another great benefit of the visual aspects of candlesticks is we know this is probably profit taking. It's up a huge 10, 12, 15% that day. And the next day shows that they're buying, pretty much tells us immediately that this profit taking of the previous day was over. What is the buy signal on E? Oh, it's the pattern. O E N Z Y E N Z Y. The buy signal is this fry pan bottom pattern. Look where it's forming right here at the same level. So you don't necessarily need a specific buy signal. All you need to do is see the pattern. And then notice what happened. You had your kind of your cradle pattern in here, but after they pulled back, notice what they couldn't do. They couldn't get below the T-line. So this may not be a clear-cut signal, but you put it in the whole realm of what's happening in this pattern. It pretty much tells you what happened here, that the downtrend or the indecisive trading here ended, and now it's starting back up again. Volume's quite low. That could be too. I didn't even check the volume on this one. PEIX. This was just telling you a very simple message. They can't get this below the T-line. Nice steady eddy. A few of the steady eddies have now started losing a little bit of steam. PES, after a hanging man up here, let me make this bigger. I closed below the T-line. This you give one more day, and why would you do that? Because previous to this, it told us the T-line was acting as good support. Let's see if it's just backed off today. It needs to open positive and trade positive and close back up above the T-line. Oh, Stephen, my minimum is 200,000 shares on a $5 stock, which obviously 200,000 shares isn't the same ramifications if you're trading a $50 stock. Because if you're going in with $25,000 a position, obviously you're going to be able to buy 5,000 shares of a $5 stock. If you're going in for 25,000 of a $50 position, you're only going to go in for, I guess, 500 shares. So the volume can be quite different. But I still want to see at least a decent number of shares traded during the day, no matter what the price is, because if I decide I want to get out or get in, I don't want to have to sit around and wait for that position to fill. I don't want to sit there 5, 10, 15, 20, 30 minutes to fill a position. I want to be able to sell the position and move right on to the next one. And with that, there's enough stocks that fit that parameter, that out of 7,800 or 7,800 to 10,000 tradable stocks and other entities, still have a universe of 2,700 plus stocks to scan each day. PEX bumper crop, I would think so. I would think with the amount of rain we're getting here in the Pittsburgh area that if other people are getting the same amount, there's going to be a real good crop year everywhere. VH or VSH, those kind of your dojis right here at the breakout. Now kind of a flutter, not a flutter, but a doji sandwich breakout situation. This one you can be buying, anticipating that this price right here is going to go back up to the top of this trend channel, which is somewhere up a few points higher. And what else did we do? SWY. SWY, that's a very boring looking chart. Except when looking at it, notice what it did at the end of this slow, boring, it's got a little kicker signal, morning star type signal. So this would be a perfect place that if you're buying the stock and or buying calls, there's not going to be very much premium in the calls because everybody's probably bored to death with this one. But that's got a very high probability of doing a slingshot effect out of here. So the reason you want to find something like that is if you're buying the calls, you're not paying the premium and the auction price. And if it starts moving, whipping out of here, not only do you get your intrinsic value increasing, but the premium will start increasing because it's starting to move that much faster. Stocks like this, again, that look good, should have been closed out today. Number one, because this one shouldn't have come back below the T-line. When it did come back below the T-line, so there's a lot of questions being asked. All right, do you close when it goes below the T-line, or does it have to close below the T-line? A lot of times, if it's telling us that we're pretty close to what I would say, if this one closed below the T-line, I want to see it because it was trading down to the T-line. I want to see it close below the T-line. This one was telling me after kind of a dark cloud, up in the overbought conditions, then they gapped it down and started trading it down. There's a whole different perspective here. This one had the potential of a J-hook pattern. If they opened this lower and started trading it down, that destroyed the whole perspective of a J-hook pattern. This one should have been trading flat and trading higher afterwards. If it's moving in this direction, that J-hook pattern is not there anymore. Thoughts? I thought SWI was being bought out. That could be. I don't know. All right, some other shorts right now. Well, I can't even read my own handwriting. That's just pathetic. TTPH, Doji, gap down. I'd probably tell us there's still some more downside. Might only be to the 50, but your stochastics are saying there could be some more downside. RNA, which looked pretty good on the plus side here not too long ago. Whoops, there we go. Doji, remember, when we get Dojis occurring right on the T-line, makes it very simple. If they open it lower, you close out the position. If they gap it down, you want to be, that tells you not only was there indecision up here, but they've told you what their decision was with great enthusiasm. It's time to not only be out of that position, but ready to go short on it. GTAT had a big reversal, a gap down. This one, with the Doji bearish signal gap down, if this opens lower, you definitely want to be shorting this one until you see a buy signal. GDP, whoops, GDP. Notice a slow curve. Notice the dumpling top, then your left-right combo. More than likely, they're heading down at least down to the 200-day moving average. And ANAC, this is one that Don M gave us on a list this morning as on the short list. So you pretty much had a dark cloud and then confirmation. You know it's at least going to come down into this area, maybe even lower. Let's see, BECN. BECN, kind of a bearish belt hold. This one you can be shorting on weakness tomorrow. And IGT. Look at the little hanging man type signal, then a close below the T-line. And where did they do all this? Notice we had a T-line crunch. Told us we should be going in this direction. They failed. If they failed up here, where do you think the next target will be? Probably back to the 50-day moving average. So there is a bearish left-right combo. Yes, left-right combo is a doji followed by a bullish engulfing signal, or the bearish is a doji followed by a bearish engulfing signal. Is a doji turning into less probable trade usually? turning into less probable trade. Larry, rephrase that. I don't understand the question. The Qs, same as the NASDAQ, but maybe not as compelling as the NASDAQ. And notice how it wasn't very decisive on the Qs today. And it still traded not only above the T line, but above the 3 T lines. IWM, the Russell 2000, notice where this kind of had a failure. Top of the channel, they gapped it up, and some sells, then a doji. This pretty much tells you that probably the uptrend is over, but you still have a trend channel. It needs to breach this. Larry is asking whether multiple dojis make a profitable trade pattern less likely. No, let's see, I don't have one on here. But if you see a series of dojis down here, and then they tell you it's going in a direction, that tells you after that big series of indecision, they finally told you what the decision is. If you see a bunch of dojis up here at the top, and then they take it down, they told you after that series of indecision, they told you what their decision was. Okay, I guess that's about all I got tonight. I didn't have very much and still took 50 minutes. So are there any general questions on candlesticks? Yeah, that's usually true too. But we know that in a case where you have a left-right combo, that's usually a very strong reversal. Or if you've got a doji followed by a gap up, that's also a strong reversal. Dojis are only days of indecision. Let's see. Dojis are only days of indecision, right? Yes. I see your question, Callie. I'll see if I can find a dark cloud in any of our, well, what's going on here? Oh, this is gold. Gold again. Gold is having problems. There's the August contract of gold, just kind of moving sideways at this point. TOT gapped up, but at bottom, no doji. Wait for the T lines. TLT. Yes, but you still have a gap up. Just the fact that they gapped it up tells you you're probably in an uptrend, but you still want to see this. This is kind of telling us that there's a support level in here, in this area, but I'd still want to see this get back up above the T line to confirm that. Why is my candle above the T line on a daily chart, but below the T line on the 10-minute chart? That question came up today in the chat room. I'm on a 5-minute chart. I hope not. Okay. Because in any trend, let me figure out. I'm going to go back to VJet just to see if I can. Let's see. VJet, your T line, you're trading above the T line on the daily, but then on your 10-minute, you're trading below the T line. So that basically tells you what's happening on the short term, meaning the short term on an intraday basis, whereas obviously the T line on the daily is for a much longer uptrend. So it all depends on what time frame you're trading. If you're intraday trading something, you're probably going to use the T lines on the 10-minute chart, the 5-minute chart, and the 1-minute chart. If you're swing trading, you're more than likely going to use the daily chart and see what the T line's doing at that point. What minimum would work? Okay. I'm a newbie. Where do I go to begin learning how to do scans? Gary is a newbie. We do have a space or an area on the website that shows how to set up the scans. Mostly the formulas for TCNet. And then, if you need scans, I think there's formulas. EDC is very good at writing scans for almost any software or quite a few of the softwares. You might just ask him in the chat room which scans formulas he has available. I think the confusion on the T-line was that it is an 8-period moving average, whatever the period of your chart. Yes, it's for the period of the chart. On the start of that trend, on the bottom, you had a doji that opened lower but then went higher for days after that. Yes, this one right here basically was your, not quite a doji, but your bullish engulfing signal. And so when can you find which signals are going to take off and blast for you? You can't. But the more, and this is why we're doing the training CDs on convergence, the more pieces of evidence you could put into your analysis of obviously stochastics, where are they, what's your signal, where's the moving averages, where's the T-line, where's your breakout levels, what type of patterns, everything you can put into your analysis, which isn't a long, difficult process. It should be almost instantaneous that you look at this chart, say, well, I got a bullish engulfing signal. If it opens positive or trades positive tomorrow, it's breaking this downward trend channel. It's telling me it's staying above the T-line. Stochastic's coming up. If it breaks through the 50, it's got more upside. And once it trades its upside, what do we use to stay long? As long as it doesn't close back below the T-line, we stay with it. Unless it starts moving too far from the T-line. Yeah, instantaneous in the fact that we can see it visually. And somebody said, well, can't people write up formulas for all this, or isn't there black boxes that we can use? The problem with writing formulas for everything that we can see instantaneously, it starts mushrooming. I had people at Merrill Lynch, at I forget which option trading or commodity trading firms, people at Cornell, and a couple option trading companies were all trying to, had people writing the formulas, but they would keep coming back, and to do the visual of all the things that should happen that you could analyze in a visual analysis, to write the formula, it just keeps mushrooming and mushrooming. Whereas looking at it instantaneously, you can see all the parameters very quickly. Okay, LPLA, strong dark cover. All right, LPLA. Yeah, that's more of a bearish engulfing signal, and that's also what you call your bearish belt hold. Notice how they gapped way out of the trading range and came back into the trading range. Here's a dark cloud cover. Here's a dark cloud cover, which has very simple parameters. It has to open above the previous day's trading, not just the close, the previous day's trading, and then close more than halfway down the candle. That's a dark cloud. That's different than a bullish engulfing, which all it has to do is open above the previous day's close and close below the previous day's open. Doesn't include the the shadows. What is your take on double doji followed by an inverted hammer in an uptrend? Again, depending on where your stochastics are telling me we're not in the overbought condition. This tells me this becomes my important parameter. And this tells me also what to do tomorrow. If it opens positive, I want to be a buyer because that tells me they're going back up to test this high. And if they're opening positive, it tells me this profit taking today is over, that we're still moving up, trying to break out through this level. If it opens lower, it tells me this level right here acted as resistance. I want to be out of the trade. I can always buy it back if it comes back up through this level. But the probability, say, if it opens lower tomorrow, they're still selling, which means they're moving. Yes, all I can think of is there must be some hidden political agenda somewhere in the world that keeps the U.S. from going after all the oil and energy reserves they know they have. And where that political agenda is coming from, I have no idea. But even somebody like George Bush, which was both of them pure oil people, didn't push hard to make a strong energy policy for the United States. So there's something wrong. There must be something in the world dynamics that says the U.S. can't become energy independent, or something gets screwed up somewhere in all the world finances. No, Jim, unfortunately with that, trying to use up everybody else's reserves before we use ours concept is, I think, there's going to be other sources of energy before oil ever runs out. T. Boone Pickens has always been kind of a barometer of what should be going on. I don't know what. Somehow there's a dynamic that the American public or the world is not being told about. So before we get into political talk, I guess, Jim, go ahead and do the double line. And do the next double line. Another thing about U.S. technology is the old wildcatting of oil seems to be going out the window, because there is so much technology where they can go in and take old fields and make them good production fields, fracking being part of that, plus the technology in the drill heads. If I'm not mistaken, I think there are oil wells in downtown LA that are in buildings where they just drill with directional drilling, that they can go anywhere they want. You've got drill heads that can go down in the ground and then turn 90 degrees and go straight into these veins where they can just pull out tons more oil. So plus with all the seismic type information, they pretty much know where the oil is. The risk of hitting dry holes is becoming much lower all the time. So anyways, I only have that information because Sandy is working in that area every single day with all the technologies that are improving production. All right, let's take a look at a few here. MDSO. That one it has to open higher and trade higher to stay in it. If it opens lower, close out the position. And Klein, same scenario. Now this one should have been closed out because you did have dojis and then it moved lower. You should have closed it out, especially with it coming back down through the low of the previous day, which was also bringing you down through the T line. So there's only one or two things that are going to happen if they've sold off below the T line with a doji. Is it's either going to stay down or it's going to come back up. In either case, if you sell it as it comes down through the low, it saves you from holding onto a position that closes down here. If it comes down here and comes back up through, you know it's done a hammer signal, and you should be buying back again. So just use a simple rule. It's going to move in the direction of how they open it after a doji, and if doji happens to be sitting right on a support level like the T line, close out the position. You can always buy back. Let's see. WTW. Stay short until you see a buy signal in the close above the T line. Power. This one should have been closed out today with the, how do these charts get so small again? With the close back below the T line. Notice the little wedge. Told us they should be opening positive. The fact that they opened lower and started trading lower told us it was time to close out that position. If you still own this, there's only one thing this can do tomorrow to stay in it. It has to open positive and trade positive. Now, I throw that tidbit in there because myself, so many years, I would hold on to a position even though I knew it was time to sell. So now the next day I have to make some sort of analysis. What do I do from here? And from here, I know it has to open positive. Equix, all you can do here is stay long until you see a sell signal. Guild, now you have a left-right combo. You closed right on the 3T line. Makes this very simple. If they open this lower tomorrow, you close out the position. More than likely, you're going to have the classic, a fry pan bottom, J-hook pattern setup. The VIX, trying to do a little morning star signal down here. But it still needs to get back up above the T-line to show there's been a change of investor sentiment. And ARRS, this one, I probably wouldn't be long or short. As you can see, you're stuck in the sideways downward trend channel. I wouldn't be surprised if you're going to see this kind of wait for the 50 to catch up and you stay in a sideways channel. There's probably better places to have your money right now. BBRY, stay long until you see a sell signal. In this case, the double doji shows you that this is consolidation without very convincing selling. That tells you if it opens positive and starts trading positive the next day, the bulls have won. You want to be in that trade. VLT, or how do I do that? RVLT, gap up doji, makes this very simple. There's good volume on this, which there should be for a $2 stock. If it opens positive tomorrow, you stay long until you see a sell signal, which would be a close back below today's open. Delta, this one you want to get ready to be going short on weakness. Notice your kicker signal that kept you below the T-line. Notice yesterday or Friday they took it up but failed right at the 50 and the T-line. Today they started taking it down and they did it below this little, you can almost draw a line right below the support area here. That tells me they're taking this back down to the 50. CRUS, this one you stay long. Now remember, you're at the top of the trend channel. Look for a 45 degree. I'd use the halfway point of this candle right now as my stop. If it came back down through there, the sellers have gained control. And ZGNX, this one's doing the typical. Notice how they broke out through the resistance level. Now they've come back and used it as support. If this starts showing buy signals, now if this closed back below the 50 and the T-line tomorrow, it'd close it out. But the obvious is that if this was a resistance level and now they're acting as support, if it does a bullish Harami or some sort of buy signal tomorrow, you want to get ready to buy because where's your next target after they've reached the 50? They're going to come up to the 200-day moving average. WRES. Watch out for your dark cloud. This one has to open flattish and start trading positive tomorrow to stay in it. If it comes back down through today's low, you want to close it out because they're going to bring it down at least to the T line. NOAA, big evening star signal. You're not quite in the overbought area, but notice where this occurred. Right here at the top of this trend channel, which means they could be bringing this back down to the 50. If this opens lower, you don't want to short it. You just want to be out of the trade, waiting for the next buy signal. Royal started getting some fire underneath it today. Had a nice day. This one also looked for a 45 degree, but notice the big rounding bottom, and they kept taking it back up above the T line. You want to stay long on this one. SPWR. This one you should have been out of today and get ready to go short on this one if it opens weaker. Notice your bearish signals, your shooting star, selling. Then you have your bearish doji sandwich closed below the T line. I would suspect they're coming back down to the 50-day moving average. EXEL. This one I wouldn't be long or short. There's nothing here to get excited about. If I was going to buy this, I'd have a buy stop at 385, knowing that it broke out through the all this congestion area. Vivus, same scenario. You shouldn't be in this one with it closing below the T line. There's just nothing here to get excited about, and there's not enough to even go short on this one. Natty, stay long as this stays above the T line. VSAC. A little scoop type pattern or morning star signal. This one you can be buying on positive trading, getting you back up into the trend channel. Whoops. Uh-oh, I boo-booed here. Okay, let's see. G-Man. G-Man, you can be buying this one. If it opens positive, just use the 50 as your stop. It shouldn't close back below it. Pran, just stay long as this stays above the T line. Let's make this smaller and make it deeper. As long as this stays in this type of trajectory, you want to stay long. Ford, stay long on this one. What was the next one? Ford. Nuance. Nuance. Get ready to buy this one. Notice what's happened over the last 4 days. Every time they opened it, they've closed it higher. Open it lower, close it higher. Open it, close it higher. Open it lower, closing it higher. That tells you whatever selling's going on, the bulls are buying in or stepping in. I wouldn't be afraid to be buying this one. As a matter of fact, you might see that on the recommended list. I mean, you could see the obvious. Strong price move, J-hook setup, and they're not selling down here. Be ready to buy this on positive trading. And Twitter, this one should have been closed out today. You can always buy it back if it closes, it comes back above the T line. RVLT, we did this one. Be ready to buy this one up on a positive open. And AXR, nice J-hook. For some reason, I would suspect the volume on this one, but if this one opens positive tomorrow, you can be buying immediately. NEO, notice the trend kicker that broke you out to the upside. You can be long this one until you see a sell signal. ONVO, another one where you just stay long as you don't see a sell signal. AERI, Another one that notice the flutter kicker setup. Now it might be 2 dojis in here. If this opens positive tomorrow, your J-hook pattern's in effect. Your classic fry pan bottom, big strong price move, J-hook pattern. Be ready to buy on positive trading, and then use. I'd probably use today's doji day or doji levels as my stop. CTP, nice slow curve, fry pan bottom breakout. You can be buying this one on positive trading. CAMT, big breakout. Look for a 45-degree coming off of here. AERI, where have I seen that before? What a funny guy. Let's see, TGTX. This one, you get ready to take profits. If it opens lower, it's closed right on the 3T line. You stay long as this doesn't do a sell signal. But if it opens lower, you close it out and then see what it does if it bounces off the T line. PEIX, just a slow, steady eddy. Stay with it. Netflix. This one's getting a little bit dangerous. There's a resistance level here, obviously. If it opens lower, I wouldn't want to see it traded all back below the T line. If it trades below the T line, it's telling you after this gap up, kind of evening star type signal, that they're selling it off. Worst case scenario, if it comes down through the T line, you close it out. If it comes back up through the T line, you buy it back in again. AMKR, still trying to get its head above water here, meaning trying to get above the T line. At this point, what was today's high? 1135. I'd put a buy stop at 1140. If it comes up through there, it tells you they're coming up doing a J-hook pattern on this one. STV. Another one that has to open positive to stay in it. If it opens lower, close out the position. Let's see. MNKD. Wouldn't be long or short this one. This was too junky going sideways. There's better places. Coach, you can be buying on positive trading, anticipating a scoop pattern coming out of here. CPAC. Another one that you can be buying if it opens positive, that flutter or that doji sandwich gap up. If it opens positive, it's still going positive. DTO. Crude oil double short. I'm sorry. Yeah, you can be buying this one, kind of telling you the crude oil is getting a little bit soggy. And Musa, this one's doing a nice curve back up. This one you can be buying on positive trading, meaning above today's open. SIG, S.CIG. There's a Morningstar signal. This one you can be buying. That's a good-looking chart. And Pran, we did. Okay. CLF. This one, if it opens lower tomorrow, told you exactly what happened at the 50. There was resistance with the Perry Shirami. You close it out, but you watch to see what it does once it gets back down to the T line, and then see what it does from there. EXPD, you can be buying this one on positive trading. Notice the 50 and the T line are acting as support. CENX, this one has to open positive and trade positive. If it opens lower, they're bringing it back to the T line. You can either take profits. if it opened lower, which means when we wake up tomorrow and we see the pre-market futures are lower, I'd probably close out the position and just see what it does at the T-line. Rig, this one you can go short on weakness tomorrow. And CSLT, this one you should have been out of today. This is why I'll let this stop ringing. That's the 1925 Hudson coming through. Oh, mercy sakes. There we go. This one, you can get ready to go short on weakness tomorrow. WPRT, if this opens lower tomorrow, anticipate they could be bringing this back to the 50. Notice the failure here at the 200. Oops, all right, I'm still listening to this message, which I can't shut off. FEYE, this one, look for it to come back to test the 50 as support. If it opened lower tomorrow, I would definitely be I forgot what I was saying. Tesla. Tesla's probably coming back to the 50. AVG. This one I wouldn't be long or short. That's about as boring and sideways a chart as you can come up with. And we did ONVO, I think, ONVO. Stay long. And is this the VIX? S.VIX. Oops, I can't get that. That was probably the VXX. S.VXX. This is short-term VIX. I think short-term, yeah, now trying to bottom out, but not until it gets back up above the T-line. And INFA, this one, you get ready to go short. Notice the dumpling top, and notice kind of the support level in here. If they open this one lower, they could probably be taking this all the way down to the bottom of the trend channel, which looks like they could be taking this one down toward the, probably even the $27 range. And Robert, I don't think whatever we do, we're going to straighten out those societies over there. They have their own way of thinking. Can you short POWR tomorrow? You probably could, but I don't think your downside is that great. I mean, we're already looking at the fact that they're in an upward trend channel. I think you're in an uptrend. I think there's better places to be shorting. That's usually in stocks that are hit a resistance level and are starting to sell off in a downtrend. Let's see. Okay, tax kicked in. All right. Half the new cars should be 35 to 40. Let's see. UVXY. Oh, no, that's just great. Getting smaller and smaller. Oh, that's the VIX. All right. Yeah, you got a little Morningstar type signal. Still needs to close up above the T-line, though. Let's see, LNG. Oh, pshaw. LNG, just stay long. Let's make this. Just stay long. Where do these things come from? Stay long until you see a sell signal, WLL. Just stay long until you see a sell signal and a close below the 50. This chart platform I use on these sessions is CQG, which is kind of the grandfather of all the charts. Very expensive. I think I pay $1,000 a month for these charts. They're just good charts for graphics. How about buying Pran now? If you're buying Pran now, yeah, you just have to, you can be buying it. You just have to realize it's already had a decent percentage move, but it's still in a fry pan bottom. So if you're buying it, you only have one criteria. It can't close back below the T line. Let's see, the Japanese yen. That's as sideways as you can get. I wouldn't be trading the yen right now for hell or high water. CAMT, nice breakout. At this point, this is very simple. If I own this, which I don't, but if I did have this position that was up huge, it needs to open relatively flat and start trading higher. If it opens lower and starts trading down, you close out the position because there's probably profit taking. You don't know if the profit taking is going to be here, 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 here. But the worst case scenario is you close out the position. You don't know if the profit taking is going to last all day. Or if there's still something very strong, even if they sell it off and you put your buy stop at today's open or today's close, and you sell it here and it trades down, if it came back up through the open, that would pretty much tell you that the profit taking's over. Okay, 45 degree is usually after a big move like this, then it moves off into kind of a steady 45 degree after that. SID, you just stay long until you see a sell signal, but as soon as it gets to the 200, you want to see what type of signal it does. Can a red doji be the start of a kicker, or must the first candle be larger? If larger, how much larger? Can a red doji be the start? It's not necessarily a kicker signal. If it's a doji, you're probably more apt to call it a doji, gap up, or your best friend. A kicker signal is based upon a large day, relatively large day, to the downside, and then they gap it up above the previous day's open and go positive. So a true kicker is when they were selling it off with decisiveness, meaning a big candle, or a big candle body, and then they gap it up and go positive, hopefully with another big candle, that you've got two big decisive days going opposite of each other, and that opposite kick is what tells you there's been a definite change or a drastic change of investor sentiment. Oh, yes, we're going to do, let's see, let me take a look at the calendar here. Let's see, tomorrow night we're going to do debit spreads and how to do spreads, kind of the basics. Wednesday night, just for the options room, we're going to be doing going into more extensive spreads of how to use them and the staggered spread. I will try to get our 5 and 10 minute set up for either Tuesday or Wednesday of next week. I'll have to see which day is open. Okay, REGI, that's kind of a belt hold. This has to open positive and trade positive tomorrow to stay long. If it opens lower and comes back below the 200, it's got to stay above the T line. But if it opens lower, it's got to stay right in this area and bounce back up using that area as a support level. LIQD, very simple. If this opens positive tomorrow, you start buying right away because it's going to be breaking out of the fry pan bottom, little cup and handle type setup, and breaking through the 50, giving you a little bit of a running room. Journ should have been closed out today. Number one, because it closed below the T-line. Number two, you can see the trajectory, especially with a bearish flutter kicker, not a flutter kicker, a bearish doji sandwich, that there's probably still more downside to this one. Ecom should have been closed out today with it closing below the T-line. You can always buy it back if they bring it back up through the T-line. Which do you think is the strongest bullish reversal signal? Kicker, doji, something else? Well, the kicker is your strongest, but the more beneficial, meaning you're going to see it more often and probably more plentifully, is the doji followed by a gap up in the oversold condition, your best friend, or a doji followed by a bullish engulfing signal, your left-right combo followed by a gap up. Okay. All right, let's call it a night. We'll see everybody in the chat rooms tomorrow. Have a good evening.